In today's episode of the Daily Brief, I'll talk about two interesting stories. I first talk about Adani and why is it in news again. And then I will discuss some interesting details on how health spendings across low-income nations is going down. Welcome to the Daily Brief show by Zerodha, where our aim is to simplify the biggest news in the financial markets in a way that's one level deeper as compared to news channels. I'm your host, Kashish Kapoor. Today is Friday, 22nd. You can find us on Spotify, Apple Podcasts, or wherever you consume your podcast. If you prefer video, you can listen along with interesting charts on YouTube. The Daily Brief is also available in Hindi. And if you like reading instead of watching or listening, you can sign up for our no spam newsletter for a quick rundown. All the links are in the comments. Let's start with the first story. The Adani Group, which is one of India's largest and most well-known conglomerates, is in the middle of a controversy once again. This time, it's the US Department of Justice, DOJ, that's asking questions. They're alleging that top Adani executives, including Mr. Gautam Adani himself, engaged in bribery, fraud, and obstruction of justice. And if these claims are proven true, it could shake investor confidence and heavily affect India's renewable energy ambitions. Now, these are all just allegations, and the proceedings may take many years to actually play out. Still, it's important for us to know what's exactly happening. So let's break it down step by step. There are three legal allegations that the DOJ has put on Adani executives. Let's first talk about the bribery allegations. According to the DOJ, Adani paid over $250 million in bribes between 2020 to 2024 to secure solar energy contracts. These projects, tendered by the Solar Energy Corporation of India, that is SECI, a PSU intended to implement India's national solar mission, which promised profits of up to $2 billion over the next 20 years. Number two, for misleading investors. Adani Green relied heavily on international funding for its projects. It raised over $3 billion through loans and bonds. And in order to attract foreign investors, they claimed to follow strict anti-corruption practices. But the DOJ alleges that this was just a facade. While presenting itself as ethical, Adani was reportedly concealing its bribery activities. This misrepresentation, the DOJ alleges, led investors to put money into the group under a false pretense. Number three is obstruction of justice. When US authorities launched their investigation, top Adani executives allegedly took steps to obstruct it. According to the DOJ, this involved deleting records, providing misleading information to investigators, and withholding key evidence. At the heart of the controversy lies a massive solar energy product tendered by SECI, at the time the largest in the world. Initially planned at a 2 gigawatts, the project later expanded to an ambitious 12 gigawatts. Two companies, Adani Green, which received the larger share, and Azure Power Global, jointly won the tender. Under the terms of the tender, the entities were to build and operate large solar farms. In exchange, SECI would buy power from them and then sell them onwards to state-run power distribution companies or DISCOMs. The trouble began when DISCOMs refused to pay SECI at the rate at which it would purchase power from these very projects. When that end of the deal proved difficult to close, SECI began backtracking on signing contracts with Adani Green and Azure. Although these agreements were supposed to be signed within 90 days of the tender, 18 months on, there was still no agreement in place. Afraid that the entire project would fall apart, the DOJ claims executives of the Adani Group paid bribes to officials from various state governments for themselves and on behalf of Azure. By doing so, they induced DISCOMs to sign agreements with SECI. This allowed SECI in turn to finally sign the power purchase agreements with the two entities. This, it is alleged, is what kept project alive. At this point, Azure allegedly owed $83 million for the bribes that had been paid on their behalf by the Adani Group. However, Azure Power allegedly refused to pay its share of the bribes. After much discussion, a non-cash transfer was allegedly worked out, with Azure transferring their most lucrative contract, one of 2.3 gigawatts, to Adani Green. But with that said, I'm sure you must be wondering that if this is an Indian company dealing with Indian officials, why is the US getting involved and taking action? You see, the DOJ's main case of corruption isn't really against Adani executives. It's against the officials of Azure. The basic case against Adani executives actually is one of securities fraud. See, Adani Green raised $2 billion in USD loans and $1 billion in bonds from American investors and financial institutions. There are many disclosures and statements one has to make before raising this amount of money. They also have to subject themselves to due diligence. In these documents and calls, at several times, Adani Group claimed that it wasn't engaged in any corruption. Fundamentally, this is what the US DOJ is claiming. When Adani Group raised money from investors, institutions in the United States on false pretense, it claimed that they had run their company cleanly and had anti-corruption monitoring systems in place, even though it was engaging in bribery. Basically, the United States cannot sue Adani's for corruption itself, so they're going after them for lying about corruption. Now, with all that said, the most important question is, what are the consequences? See, if things are proven, these allegations could lead to billions in fines, restricted access to global funding, and major reputational damage for the Adani Group. Also, there have been arrest warrants that are issued against Gautam Adani in New York over alleged bribery. So he may face formal legal proceedings in the US, including the possibility of arrest, trial, and severe repercussions. Adani Green might also take a severe reputational hit, making it difficult for it to secure further contracts. These allegations could also trigger a chain reaction in India, prompting authorities to investigate corruption and fraud more closely. The scrutiny might extend beyond Adani Group, reshaping corporate governance across similar projects. So all in all, this isn't just another corporate controversy. It's a significant test of accountability. The involvement of US authorities raises the stakes, and it turns what might have been a regional issue into a global one. The outcome here could reshape perceptions of corporate governance, investor trust, and the future of renewable energy in emerging markets like India. Now, moving on to the next story. We usually dive into all things business and finance in the daily brief, but today we're switching gears to talk about health. Yup, we're talking about health. Why? Because the health of a population directly impacts the economy. Healthy people work more consistently, are more productive, and contribute more. Kids who grow up healthier develop better cognitive skills and earn more as an adult, which drives progress. Families also save on medical expenses, freeing up money for education, housing, or business. You get the gist, right? The numbers back it up too. A 10% drop in malaria cases boosts economic growth by 0.3% in affected countries. And eliminating severe malnutrition in kids increases their adult earning by over 20%. So better health doesn't just mean healthier people, it also means stronger economies. But when healthcare systems are weak, people can't get the care they need. In many cases, they rely on out-of-pocket expenses, which means paying directly for doctor visits, medicines, or hospital stays without insurance or government support. For families, this can lead to debt or poverty. This is especially true in low-income and low-middle-income countries where most people can't afford healthcare. For example, in India, nearly half, that is 50.6% of all healthcare expenses are paid directly by individuals. In contrast, in the US, this number is just 9.9%. Many of these countries also rely on international trade or grants to fill the gap, but these funds are unpredictable. So you can't build a system on something that might just disappear the next year. That's why government healthcare spending is the backbone of healthcare system in these countries. It's the safety net that ensures that people get care and aren't financially ruined in the process. If that spending drops, there's no backup plan for them. Today, we want to share the most recent trends in government health spending, that is GHS, across low and lower middle income countries. Combined, these countries are home to close to 3.4 billion people. These trends tell us a lot about how nations are prioritizing health and what that means for their people and their economy. First, let's talk about government per capita health spending. That's how much, on average, governments spend on healthcare for each person. During the pandemic, health spending surged as governments scrambled to respond to the crisis. But by 2023, that spending had significantly declined in many countries. In low-income countries, spending dropped to pre-pandemic levels of just $10 per person. And for lower middle-income countries, it fell to $57.6 per person. Just to give you some context, agencies like WHO, World Health Organization, suggest that $80 per capita is the minimum needed to provide essential health services and achieve universal health coverage. The decline is even more alarming when you look at the growth rates. During the pandemic in 2020, growth rates for government health spending per capita skyrocketed, reaching nearly 30% in low-income countries and a significant spike in lower middle-income countries as well. This was a direct result of governments prioritizing health systems to combat the crisis. However, the picture changed drastically post pandemic. By 2022 to 2023, growth rates for health spending plummeted, even dropping into negative territory for low income countries. In contrast, general government spending per capita, that's GGE, remained relatively stable, showing that while overall spending slowed, it didn't suffer the same steep declines as healthcare. What this tells us is that healthcare is no longer a priority it was during the crisis. Governments are spending more overall, but healthcare is taking a smaller share of that pie, reflecting a shift in focus away from public health systems. Next, the share of total budgets that government allocate to healthcare, that is also shrinking. For low-income countries, this health share dropped from 6.2% in 2019 to just 5.6% in 2023. Lower middle income countries saw a smaller decline, but the trend is still downwards. Essentially, healthcare is no longer getting the focus it once did within the government budgets. Why is this the case? There are several reasons why low and lower middle income countries continue to struggle to prioritize healthcare spendings. For one, many of these countries face significant financial constraints. They often have limited tax base, meaning they collect less revenue from their population to fund public services, including health. This leads to tough budget decisions and trade-offs. A major factor is also the rising debt burden. Many of these nations are heavily indebted, and the cost of servicing that debt often takes precedence over healthcare or other critical services. Over the past decade, the share of government revenue spent on foreign debt payments has more than doubled. For most low income countries, this has risen from 6% to 14%, and in some cases, it's as high as 25%. This leaves very little room for healthcare spending. When a large portion of government revenue is spent on repaying foreign creditors, there's less money left for health, education, and infrastructure. This trade off becomes even more challenging as rising interest rates increase the cost of borrowing, putting further pressure on public finances. Essentially, debt service is crowding out healthcare spending. What does this mean eventually? This drop in healthcare spending has some very, very serious consequences. First, struggling health systems. You see, essential services like immunization and disease control suffer. Public hospitals face funding shortages and healthcare workers may go unpaid, risking a system collapse. Second, it's all about tough choices. Governments must choose between healthcare, infrastructure, education, or paying off debt. Cutting healthcare may seem like a quick fix, but causes long-term damage to public health and economic growth. Number three is about unreliable aid. Many countries rely on unpredictable international aid, which cannot support a stable healthcare system. And finally, no public funding and no safety nets. Without government support, families pay out of pocket, often falling into poverty. Rebuilding collapsed system is even costly. You see, this isn't just a trend, it's a wake-up call. Governments need to step up and prioritize healthcare spending now. Without strong public funding, the health of millions and the economies of these nations hang in the balance. Now, on to some tidbits. First, India's GDP growth slowed to 6.5% in Q2 FY25, impacted by heavy rainfall, weak exports, and contracting corporate margins. Manufacturing showed some resilience with 7% growth, but agriculture dipped to just 2%, reflecting the broader economic pressures. Number two, NTPC is launching a 1.85 trillion rupee green hydrogen hub in Andhra Pradesh, partnering with global firms to support industrial decarbonization. Leveraging renewable energy, this initiative targets industries like steel and aluminium, positioning India as a leader in green hydrogen. Number three, a 51% surge in imports has pushed steel prices to a 4-year low, despite a 12% rise in domestic consumption. Falling realizations have squeezed margins for key players like Tata Steel and SAIL, though Q4 recovery hopes hinges on restocking and infrastructure demand. Number four, Advent International is in talks to acquire 51.74% stake in VIP Industries for 3,379 crore. Amid a 25.7% stock decline, this deal could reshape VIP's strategy as it faces competition from D2C brands and global players like Samsonite. That's it for today. I'm your host Kashish Kapoor. This was the Daily Brief, and Anurag will see you in the next episode.
Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.